I spent a period of about 4 months trying to brainstorm technical ways to improve Bitcoin. There's over $1 trillion of kind of incentive to be able to use Bitcoin. Some of us sort of predicted that before they'd half started. A VM-based smart contract approach was misguided for the reason that it's too complicated to keep it secure. You can divide Bitcoin sort of phases into 3 waves, and some of that has happened, but I think a lot of that is in the future. So what's going on with Bitcoin this time, in June this year? And I think there's a lot of innovation in layer 2s, Arc and Fedimint, and some new layer 2 ideas. So a lot of people building things. Still, every few weeks, you see news from different financial organizations, most recently Morgan Stanley with their E-Trade division, which I think has 50 million retail users, making Bitcoin available on the E-Trade platform. That's something interesting for me to see because, at the same time I was working on Hashcash proof of work and brainstorming about Bitcoin similar ideas. In 97, I was a day trader on E-Trade. So it's quite a few years, and Bitcoin been around for a while. And, there's still new financial institutions adding access to Bitcoin. In terms of where Bitcoin is, it's always, short term, a little bit volatile, but longer term has performed very well historically. I think the institutional adoption actually takes longer than people expect to land. And so for the first 2 years of the current halving, we're about halfway through, there was a lot of news flow about institutional adoption. And I think in practice, much of that is still to follow because it takes a somewhat bureaucratic process for the Bitcoin to get allocated and to the products to be sold by their financial advisors or brokers or fund managers. $1 million of Bitcoin is scalable because there are a lot more people in the world than there are Bitcoin in the world. And so the way that is reconciled is when the demand exceeds supply, the price has to go up to accommodate that. And so, if people have a certain amount of capital that they are able to deploy, they're going to end up buying part of a Bitcoin. And, it's one of the intuitions people have when they first hear about Bitcoin. It's like, well, a Bitcoin is expensive. I can't afford to buy one. And the answer is, well, you can buy part of a Bitcoin. I think over time it gets a little harder to make changes because there are more people with technical views. And I think there's a sort of trade-off there. You do want Bitcoin to be able to evolve to support layer 2 security, to improve layer 2 security and, support new use cases, to support scalability, privacy on the layer 2. But you also ultimately would like Bitcoin to ossify, as it were, which means to undergo no further changes. And so the middle ground is what changes does Bitcoin need in order to ossify and not limit what can be done with layer 2s or even with layer 1 cold storage security. So there are a few, candidate changes with covenants and, maybe longer term with simplicity and some, bug fix, soft forks as well. I think it's very difficult to see Bitcoin failing because even the most severe, unexpected, technical problem would be worked around, even if in an inelegant way, if that's what it took, because, ultimately there's over $1 trillion of kind of incentive to be able to use Bitcoin. And if you look at the other types of payment technology available, like the fiat currency, the banking system, all of these things are far less secure than Bitcoin. So, if Bitcoin had to do something as a temporary workaround, a problem that, wasn't foreseen, I think that can be contemplated because, people want the economic effect of Bitcoin and the permissionless open network effect. And so, they would adapt and work around problems. It's interesting to see new, younger people who grew up in a space develop new ideas. I think there are definitely much innovation remaining to be explored in Bitcoin layer 2 protocols to transfer the security to layer 2 and to find creative new models for layer 2s. So I think there is a phenomena going back some years now, of course, of the internet native. Somebody who went through primary school and high school, university, where the internet was already a thing. Bitcoin is getting old enough that now there are people doing business development or software development around Bitcoin where Bitcoin was around, since they were teenagers or earlier, right? And so they didn't experience a world without it. I think today the institutional adoption is relatively early. So I think you can divide Bitcoin sort of phases into three waves. The first one was the people who are mining Bitcoin or buying Bitcoin on Bitcoin exchanges. Second wave was the spot ETF, so that people had a way to buy Bitcoin via a financial institution. And the third wave, a number of institutions have talked about model portfolio recommendations, i.e., putting Bitcoin allocations into managed funds. And some of that has happened, but I think a lot of that is in the future. And then you have the other kind of institutions like the pension funds, the sovereign wealth funds, the individual states in the US and some countries with sovereign Bitcoin ownership, whether that's Abu Dhabi or the Swiss National Bank. So I think that is still early. So, when a lot of money is professionally managed or managed in the pension funds, in the savings plans, in the mutual funds. And so I think you'd start to see a price impact as the demand would exceed the supply as that demand was delivered to the market. Well, I think the VM-based smart contract approach was misguided for the reason that it's too complicated to keep it secure. Some of us sort of predicted that before they'd half started, but I think they're coming to realize it empirically, which is that, every year there are some billions lost to basically smart contract security issues, which I think ultimately because the bottom layer is too complicated, and then the libraries for the language are too complicated, and complexity is the enemy of security, I think, is the ultimate message. And so with Bitcoin, you don't have these kinds of problems because the security model is simpler and more robust. And then the things built on layer 2 about smart contracts, like simplicity on Liquid or the additional opcodes on Liquid, are still building on the same robust architecture base. I mean, actually, when Bitcoin first came out, my first reaction was it has a different security model than the previous electronic cash systems. So it's based on, proof of work incentive for miners. So it's kind of an arms race type of security model. So I think it took a lot of people some time to adapt to that, particularly the academics, because it didn't look like the previous electronic cash systems. And then personally, my next reaction was it doesn't have very good privacy. Now, that is where I later developed the idea of confidential transactions that are implemented in Liquid, Bitcoin layer 2. I think it would be cool if that were actually available on the main chain. And, so we implemented it a blockstream on the Liquid layer 2, but it's a candidate technology that could make sense for the main chain. So that's one thing. I think surprisingly, however, most of Bitcoin's design is very hard to improve. I got more active in Bitcoin in 2013 and did what everybody does, go down the rabbit hole, try to learn everything that's available. I spent a period of about 4 months trying to brainstorm technical ways to improve Bitcoin. And somewhat to my surprise, that basically everything you tried to change generally made it worse or broke something. So it seems to exist in a sort of narrow design space. I think that's also one of the reasons it's useful to describe Bitcoin as a discovery, because you can see that it's hard to find, but it's very mathematical in nature. And, that's why people are looking at, so Aaron Van Wirdum with his Genesis block book, looking at some of the early discussions on the cypherpunks list, you could see that there were Bitcoin-like ideas, but, the participants, myself and others, didn't quite manage to figure out how to make it work. And so the discovery idea is eventually somebody would have discovered the formula, the additional observations to make that work.